Hey, what's up, friends? You're going to want to stick with me today. We're talking real estate and housing projections for 2022.
I keep it real, I keep it real, I keep it real, just keep it real.
Hey, what's up, guys? For those of you that know me, know I'm keeping it real estate in Northeast Indiana with Coldwell Banker Real Estate Group. And for those that don't know me, my name's Sam Hartman. The reason I'm here today is because I want to educate my buyers and sellers. And I know a lot of buyers and sellers out there do a lot of research and considering their options before they ever reach out to me. But I want to make sure that you guys have great, valid, up-to-date information to consider when making your next steps, whether it's to buy or sell a home. And so today we're going to dive into some of the key projections in the housing market as we go forward into 2022 so that you can consider this information and how it might affect you and your family and the decisions you might make when it comes to real estate. So let's jump right into it. First, I want to begin talking about interest rates. Interest rates can clearly play a big part in the housing market. It affects buyers' affordability. It affects how much interest they're paying on their mortgages over the lifetime of a mortgage, which can make a big swing between a really low interest rate and maybe a higher rising interest rate. And so we're going to look at what projections are being made for interest rates over the next year, but we're also going to put that into some historic context and see how it might affect other areas of the real estate market, like home price appreciation, home sales, and things like that as well. So let's get right into it and see what is going to happen with interest rates in 2022. So we've got four entities here that are making mortgage rate projections, and they're broken down by quarter. And the bad news is each quarter is going to be rising. That's the projection. So in quarter one, they expect them to rise to about 3.3% on average. In quarter two, an additional bump up to 3.43%. In quarter three, up to 3.55%. And in quarter four, 3.7%. So these are the averages of these four entities' projections. And the bad news is that it's going to rise over this next year. All indications seem pretty high that interest rates will rise over the next year. But let's take a deep breath. Let's put it into some historical context. And then let's talk about if and will this affect other parts of the real estate market as well. So first, we'll go back about 5 years. We've got this great line graph here that shows what interest rates have done each year from 2016 all the way to 2021 this year. So 2020 was a pretty wild year, the year of COVID, interest rates, and the government, they put a bunch of money into all the things that kept interest rates low. And so 2020 actually saw historically low interest rates. Coming out of 2020, we've kind of bounced up above 3%, back below 3%, and now we're finishing the year a bit above 3% with, again, those rising projections into 2022. But let's look at these past years, all the way 19, 18, 17, 16. Historically, even if we rise up to as high as 4%, which none of the projections were even saying, they are still going to be right there kind of in our 5-year historic average, very strong rates historically, and kind of puts us in the mix of those years as well, in which before COVID were a bit more normal real estate markets than we've been dealing with recently. But I want to look back even further than just 5 years. I want to look back 5 decades and see what interest rates look like and take a really deep consideration about where these rates are going and what that means for buyers. So this is a graph that shows interest rates by decade. And so over 2022, interest rates are going to average, if those projections hold true, they're going to average right around 3.5%. But in 2010, the decade of 2010s, interest rates were almost 4.1%. In 2000s, they were over 6% on average. In 1990s, over 8%. In the 80s, I don't know if you other millennials out there have heard your parents talking about the interest rate that they bought their first home at. I've heard 18%, 19%. the average in the 80s was 12.7%. And in the 70s, 8.86, almost 9% that they were averaging. So let's take the information of 2022 rates rising for home buyers, and let's take a deep breath, because historically, these interest rates are still amazingly favorable for buyers. And so yes, are they historically low? No. But if you're a buyer that wasn't able to take advantage of those extremely low interest rates, sitting on your hands and hoping for them to come back down, or hoping for another pandemic crisis for them to come back down, or waiting for another housing crash for prices to come back down, is a really bad strategy, because there's just not data there to support that history of that happening again, especially so close to something so recent as our most recent housing crash. So take a breath, home buyers. Rates are rising. If you're in the hunt, do it sooner. You'll get a better interest rate with projections considered to be rising steadily over the next year. But take a deep breath. If you don't get your home this year, if you are in competitive situations where you're still losing out on offers or anything like that, stick with it. The rates are still going to be extremely historically competitive. So next, let's talk about home price appreciation. And there's this great survey done. It's called the Home Price Expectation Survey. And it's a panel of hundreds of economists, real estate experts, investment bankers, and marketing strategists. They get together to put together their thoughts on what's going to happen with home price expectations. And so that is one of the organizations we're going to look at, their considerations and their projections for 2022. So you can see here, we've got multiple organizations making their home price forecasts for the year 2022. And if we averaged all of them, all of the forecasts average about a 5.1% appreciation in 2022, as high as 7.5%, as low as 2.8%. So I know this is not quite the gangbuster appreciation we've seen in recent years, but that's not a bad thing. A lot of people saw that crazy appreciation, 10, 12, double-digit percentages over the last couple of years, and they say, oh, housing's going to crash, housing's going to crash. Well, that appreciation is very different from what led to the crash of 2008. And you can see here, things are calming down. It seems things are maybe slowing down on the appreciation, but they're not depreciating. The difference is starkly different. This is still home price appreciation. So if a home buyer buys a house in 2022, not only are they going to begin paying on a mortgage that builds equity in their home, they're also going to gain home price appreciation in the year of 2022, and quite frankly, in years to come as well. And we'll talk about some of those projections here also. So again, this is just kind of a forewarning for those buyers that say, you know what, I'm going to wait till the housing market crashes again. Well, that housing crash that we most recently experienced, I know it's a bit of recency bias for everybody, but that was kind of a very wild, unique circumstances that led to that. None of which those circumstances are forming in the same way that we're experiencing today. And so get off your butt. If you want a home, you're going to build equity by paying your mortgage, but you're also going to build equity by the home value appreciating. So right now, sitting at home paying rent is not building any wealth or value in your life or in your pocketbook, really. So I said I would bring this up. How are the mortgage rates going to potentially affect home price appreciation as well? And so are there a correlation between the mortgage rates rising and home price appreciation falling? And so here's a historic look. We've got the bar graph showing price appreciation, and we've got the line graph showing the ebbs and flows of interest rate averages over those years as well. And so you kind of see a little bit of a decline with an upswing and a decline with an upswing and a decline with an upswing. So there was kind of like a little bit of a trend here with the interest rates, but you can see that really there was no pattern that was established or defined in home price appreciation. When rates would rise, home price appreciation didn't automatically mean that they fell as well. So there might be a slight correlation to some of these things because, to be frank, the interest rate does affect a buyer's affordability, so it might slightly affect the buyer pool out there, but there is not a strong correlation that interest rates rising are going to severely impact or change what the home price appreciation expectation really is going to be. So I want to add in this quote by Mark Fleming. He's a chief economist with First America. And Mark says, house price appreciation is resistant to rising mortgage rates, primarily because most home sellers would rather just withdraw from the market than sell at too low of a price. This is a phenomenon they call the downside sticky. So that's Mark's comment on why house price appreciation tends to be a bit resistant to the ebbs and flows of those mortgage rates. Next, let's talk about what's projected for home sales. So we know mortgage rates are looking to increase steadily over the next year. We know price appreciation is expected to be positive, averaging around 5% over the next year appreciation. So that's still money going into homeowners' pockets. But what's going to happen with sales? Are we expecting sales to increase, decrease? Is it going to be more competitive for buyers, less competitive for buyers? And so what's the expectation there? So home sales forecast, these were some of the initial forecasts going into 2021, and then also what we're kind of forecasting going into 2022. Now we've got the yellow line there that shows what the number of homes sold in 2020 was, which was 6.5 million. So where we're at finishing 2021, we're above that 6.5 million. We have increases there. And then all projections for 2022 is that home sales are still going to be strong. We're going to talk about a few important reasons why that is. But again, even though interest rates are rising, they're still historically low. So buyers are benefiting from low interest rates. We're also going to talk about inventory, how that affects things as well. So again, let's talk about those rising interest rates and their correlation to home sales. So again, we've got a bar graph showing historic home sale data all the way back to 1989. And then we've got a line graph, again, showing those ebbs and flows of mortgage rates over the same time period. And as you can see, there is really no direct correlation here to the ebbs and flows of the mortgage rates and how home sales had been increasing or decreasing. So you see there's a steady increase up to the housing crash where they crashed, and then we have a steady increase again to where we're at in 2020, 2021 as well. So even though those interest rates again are increasing, we don't have a direct correlation that says that that's going to negatively affect home prices or I'm sorry, home sales. So another quote here from Mark Fleming: context matters for purchase demand. The economy is improving and millennials continue to age into their prime home buying years in large numbers. So the context remains extremely good for the housing market. That's an important note, that millennials, the historically largest generation, are hitting their prime earning years and their prime home buying years. They're beginning families, they're buying their first houses, they're buying their move-up houses, which is a very hot part that keeps the wheel turning of the housing market. Next, let's talk housing inventory. Inventory is always such a big effect of the market because it determines, is it a buyer's market or a seller's market? And so the next graph we're going to look at here is a graph showing what a buyer's market is and what a seller's market is. So 6 to 7 months supply of homes is considered to be a neutral market. Above that line is a buyer's market. Below that line is a seller's market. And today in the United States, we're below 3 months supply of homes. In Northeast Indiana, we're below a month's supply of homes. So we're drastically behind on the inventory that we need to keep up with buyer demand. So projections going into 2022, we do expect some of this inventory level to start to rise a little bit because of the rising interest rates. That might affect the buyer pool just a little bit, but it's going to take a big swing in that inventory to affect this seller's market. We're still strongly established in that seller's market. I expect this whole year to be strongly established in that seller's market, and expect it to still be fairly competitive for buyers in their pursuit of a new home as well. So buyers, stay strong, stay motivated, stay eager, stay aggressive in this housing market going over into 2022. All right, and now lastly, what I want to touch on is not just the next year's projection, but 5-year out projections and what home price appreciation can add in value to you as a homeowner. So if you're a current homeowner, congratulations. I hope that through all of the shutdowns, through COVID, through teaching at home, through working at home, you have extremely benefited from the values of being a homeowner, but you've also financially benefited. But those of you that aren't homeowners, here's your opportunity. Here is the data. Here's what homeownership can do for you financially, building wealth over the next 5 years. So this is taking a home purchase of $350,000 this year in January of 2021, and we are building in the appreciation that is expected over the next 5 years. And so just with general home price appreciation over the next 5 years in buying a home this year, you could potentially put over $100,000 of wealth in your family's pocket. That is no small chunk of change. And so I just show this to encourage you home buyers to stay at it. This is the wealth, the life-changing opportunity that home ownership can offer you. But at the same time, it offers you that peace of mind. It offers you that consistency. It offers you that really non-monetary value of a place to live, a place to eat, a place to sleep, a place to work, a place to play with your kids. All these things that have maybe made you feel constrained in an apartment or living at mom and dad's house or anything that you felt where you've been living over the last year. This is the financial benefit of it, along with all of those non-financial benefits of homeownership as well. So that's it, guys. That's what we're looking at. Staring down the barrel of 2022. You've got the projections. We will continue to monitor those things because projections are never set in stone. All they are is projections, and we want to make sure to continue to monitor them, update you if that information changes. But I hope this information is helpful. And again, I want you to use this information in making considerations for you and your family, in your goals for housing, in your next steps for housing. And I want to give you one more stat. The average homeowner and home buyer is considering their move for between 9 to 20 months before they ever reach out to a realtor. And I just want to encourage you to reach out sooner. There's so much information, so much value that I can help add to the process, and education that I can help add to you, to your mindset, so that you can evaluate and be empowered to make a great decision for you and your family. So there's really, I hear it all the time. We don't want to waste your time, Sam. We don't want to take up your time. This is literally my job, is to help people make great real estate decisions. So please reach out, no matter if you're at month 1, month 9, month 20 in your consideration. Reach out, the sooner the better, because I guarantee you I can add a piece of the puzzle that maybe you haven't thought of yet, and that might help speed up the process for you and help you make a better decision for you and your family. Thanks for sticking with me today, guys. Again, my name's Sam Hartman in Northeast Indiana, keeping it real estate. Hope this was valuable. Make sure you like and subscribe to all my channels so that you stay up to date with all this information, and I'll see you next time.
Just keep it real.